Stop! If you're dreaming about buying a home in the Bay Area, you might want to hear this first. Buying a house here is already a challenge, but what if I told you it's about to get even worse? We got rising home prices, sky-high mortgage rates, and an insurance crisis that's leaving homeowners stranded.
Devastation caused by natural disasters like the wildfires in California is hitting the home insurance industry hard, but the impact is being felt far beyond just California. Spotlight on America discovered skyrocketing rate increases across the country and a record number of homeowners being dropped from their coverage.
These aren't just minor bumps in the road. They're shaping up to be a financial nightmare for anyone looking to buy a home in 2025 and beyond. In today's video, we're breaking down why affording a home in the Bay Area is becoming nearly impossible, and if you're still planning to buy, what you need to know to protect yourself.
Here's something you don't hear often. The Bay Area is at the bottom of a new real estate survey. Yes, Zillow report is looking at the hottest housing markets in the nation. So why is the Bay Area left out in the cold, and what does that mean for buyers and sellers here?
Generally speaking, the Bay Area ends up at the top of most real estate surveys, whether it's because we're in demand or because housing prices here are so high. But a recent analysis from Zillow predicts the hottest and most competitive markets in the new year, and we're nowhere to be found.
Let's get into it. The U.S. housing market has been on this unaffordability trajectory for several years now.
Did you see there's a story, by the way, in the Journal, is it this morning, that says that your mortgage is not actually even your biggest cost anymore? Did you see that? It was actually a surprising,
No, I did.
Surprising statistic.
Like 32% were paying more than half of their mortgage payment to property taxes and homeowners insurance. Pretty troubling.
And as we move on through 2025, the pressure isn't easing up. The dream of home ownership, once an achievable goal for the middle-class American, has turned into a high-stakes financial challenge. Let's break down the two biggest roadblocks stopping buyers in their tracks. The first one, mortgage rates. For several years now, buyers have been holding their breath, hoping that mortgage rates would finally dip below 6%. But that hasn't happened. Instead, we've been seeing persistent rates hovering between 6.5% to 7%, making borrowing money more expensive than it's been in decades. To put this into perspective, in 2021, a 30-year mortgage at 3% on a $500,000 loan meant a $2,100 monthly payment. At today's 7% rate, that same loan now costs $3,300 per month. That's an extra $14,000 per year, just in interest alone. Oh, by the way, that $500,000 house is no longer $500,000, more likely $700,000, which means higher mortgage payments. Even if home prices were to stabilize, the high cost of financing means buyers are still getting squeezed, and that's only half the problem. The second one, you see, the housing market isn't just expensive, it's extremely limited. A big reason, the golden handcuffs effect. Homeowners who locked in record low mortgage rates in 2020 and 2021 aren't selling. Why would they trade a 3% mortgage for a 7% mortgage? This means fewer homes are hitting the market, keeping prices high even as affordability drops. And the numbers show just how bad it's getting. New home listings are down nearly 40% compared to pre-pandemic levels. The US has a housing shortage that's just a little bit over 3.8 million homes that's needed. So even if rates do drop slightly, buyers will still be competing for a limited number of homes, pushing prices up yet again. So what does this all mean if you're looking to buy a house in California, and especially here in the Bay Area? Well, for one, like I mentioned, mortgage rates aren't coming down fast enough to offset high prices. Even a small rate drop won't make housing affordable. Then we still have very limited inventory that keeps competition fierce, especially in desirable areas. With few homes available, bidding wars continue, pricing out average buyers. And if you're a first-time home buyer, this market can be even more overwhelming. There are a lot of costly mistakes people make when trying to buy their first home. Mistakes that can set you back thousands of dollars or even cost you the house you wanted. That's why I put together a free guide, 7 mistakes first-time home buyers make, so you can avoid these pitfalls and make smarter decisions. Grab your copy now. Just click on the link in the description or the pinned comment below and I'll send it straight to your inbox. Now back to the big picture, because we haven't even talked about California's insurance crisis, which could be the final blow to all this. The insurance crisis in California is escalating, with major insurers withdrawing coverage from high-risk areas, leaving many homeowners in limbo. This situation is particularly dire in regions like the Bay Area, where the combination of wildfire risk and high property values creates a precarious environment for both current homeowners and prospective home buyers. Insurance companies are pulling out. In recent years, several major insurance companies have significantly reduced their presence in California. If you ran a business and lost billions every year, how long would you keep operating? That's exactly the situation insurance companies are facing in California right now. State Farm lost over $7.5 billion in California in 2023. Farmers lost nearly $5 billion. Berkshire lost $4.5 billion. Allstate down $4 billion. This isn't just bad for these companies. It's a warning sign for homeowners. If insurance companies can't afford to stay in California, what does that mean for your ability to insure your home? In May 2023, State Farm announced it would cease accepting new applications for business and personal casualty insurance in California, citing historic increases in construction costs, outpacing inflation, rapidly growing catastrophic exposure, and a challenging reinsurance market.
As we round the corner on this Memorial Day and transition into summer and fire season, there is new insurance anxiety for California homeowners. State Farm just announced it has stopped selling new home and business policies in our state. So it's blaming soaring construction costs and the elevated wildfire risk. Devin Feely looks at what the move could mean even if you're not with State Farm.
The withdrawal of major insurers has had tangible effects on various communities. Here are some areas that no longer have coverage. In the Santa Cruz Mountains, in this area, more than 65% of State Farm policies are being non-renewed, leaving homeowners scrambling for alternatives. In Santa Rosa, nearly 48% of policies are facing non-renewal, significantly impacting residents in this region. In Sonoma County, over a quarter of policies were non-renewed in 2023, highlighting the severity of the crisis in certain locales. With traditional insurers pulling out, many homeowners are forced onto the California Fair Plan, the state's insurer of last resort. However, this option comes with significant drawbacks. Policies under the Fair Plan are often 2 to 3 times more expensive than traditional insurance, placing a substantial financial burden on homeowners. The Fair Plan primarily covers fire damage and may not include protections for liability, theft, or other perils, necessitating additional wraparound policies to achieve a comprehensive coverage. The insurance crisis poses a significant threat to the housing market, particularly in high-risk areas. As more properties become uninsurable due to non-renewals, their marketability decreases. Prospective buyers are unlikely to purchase homes they cannot insure, leading to a decrease in demand. A reduction in demand can lead to declining property values. For instance, property values in the Pacific Palisades dropped 16% after State Farm canceled most policies there. Widespread insurance non-renewals can create uncertainty in the real estate market, potentially leading to a broader decline in home prices as the desirability of living in high-risk areas diminishes. The convergence of rising insurance premiums, policy non-renewals, and the increasing reliance on the costly and limited Fair Plan creates a precarious situation for homeowners and prospective buyers in the Bay Area. The potential for homes to become uninsurable and therefore unsellable possesses a significant risk to property values and the overall stability of the housing market in high-risk regions. If you're considering purchasing a home in the Bay Area, it's crucial to assess the insurability of the property and understand the long-term implications of the current insurance landscape. What do you guys think? Will California fix this crisis, or are we heading for a housing crash? Drop your thoughts in the comments below. Thanks for watching.